Welcome back to the Hunter of Dividends YouTube channel. We're here to talk about Leggett and Platt Incorporated, ticker symbol LEG. This is an underrated dividend stock. If you look at this one pretty closely, I think this is one that's not talked about very much for a dividend king, especially. So let's take a look at this company a little bit first. Over 20,000 full-time employees. This company, profile of it, they were 1883 founded, a very old company, a lot of bedding products, flooring and textile, steel rods, wires, chemical and additives, foams, inner springs. Nothing too exciting about Leggett and Platt, but as dividend investors, I think we have to be okay with not exciting. I don't think this is really a growth name, but it's a good name for income investors. And if you think the stock market could be hit in the long term, or could take a bit of a dive at times, I think this will be a safer stock than some of the other stocks, supported by its dividend. Certainly, it's already taken a pretty big dip, and that's the main reason for that. So let's take a look real quickly here at the 1-year chart. It looks like a ski slope down. I mean, this is a pretty drastic dive from 59.16, the 52-week high, down to 35.87. We see the stats here for Leggett and Platt. Current stock price 35.87. Current yield of 4.68%, a really impressive yield. Take a look at what the yields are on CDs now, or savings accounts. You'll get next to nothing with the low interest rate environment. So 4.68%, a really healthy dividend. Simply Safe dividend score of 70. This one's a dividend king, 51 consecutive years of growth. Really impressive. Like I said, it's kind of flown under the radar a bit compared to what you would expect for a stock like this. The payout ratio, 57%. So we're getting to a point where I don't think they can raise the dividend very quickly. The dividend growth here in the last 5 years, 4% on average. So I think we continue to see growth in the 3 or 4% range in the dividends. So not a big dividend grower, but one that's already paying a good, healthy income. The 2022 PE ratio of 13.04, pretty low PE for a company that's proven itself over the long term. This isn't a very risky company, in my opinion. The operating margin of 11% is a little bit low. That would be my concern here with Leggett and Platt. And I do own this company. It's not one of my bigger positions, but I've been adding to it as it drops here recently, added to it here in the mid 30s. Return on equity, 26%. So they've done a good job there in that spot. Let's take a look at Simply Safe dividends on this one a little bit. They rate this one a 70. So safe, not extremely safe. This is one where the dividend streak is impressive. The dividend growth slowing, as you can see here by the chart. It's definitely pared back. It's how much it's going to be growing, but according to them, this dividend yield's much higher than it's usually been. The forward PE has normally been a 5-year average of 16.8. They have the PE at 12.9 for the forward PE. You see the price range way at the bottom here. We see some interesting stuff as far as earnings per share growth. They've had a bit of an up and down cycle, sales growth the same way. But overall, this is a growing company. They're just not growing very quickly. ROI above 8% is what they prefer, and we're at 13% here for Leggett and Platt. So this is a pretty good number. Operating margin, like I said, is a little bit too low. Interest coverage, 7.27. I'd rather that be a bit higher. So I don't think that this company can continue to grow their dividend very much, because I don't think there's enough cash there to keep getting big increases. At the same time, we're talking about a company in Leggett and Platt that's been around for such a long time. If you look at the statistics for it, price to sales just 0.96. I mean, this is not priced at a very high number at all right now. Price to book only 2.89. I think that this is a stock that is trading at a very fair valuation right now. 52-week change of negative 27%. So here's an income stock that I still believe is flying under the radar at this point. Leggett and Platt, the dividend king. Simply Safe dividend score of 70, which is pretty good. 51 straight years of growth. 57% payout ratio, not bad. I think the price here at PE this year of 13, I think it's very fair. So I'm going to continue to add to Leggett and Platt on dips here. I would love to hear what you guys think of Leggett and Platt here. Drop it in the comments below. Subscribe to the channel. Certainly appreciate those of you who are viewing this. Give it a thumbs up if you like this content. Try to be doing more of this here in the future. As I've said before, I'm just a 30-something with young kids. I'm trying to grow the investment portfolio for the family in general, and love to do this. Investments and dividend investments specifically are something that I love researching. So I'll be putting out more content soon. Thank you to everybody who tunes in. Have a great weekend.